All right, everybody, welcome back. So today I'm going to be doing 2 months worth of dividend updates and options income updates, I guess. And it's been a little bit of a time since I've been able to sit down and actually do this. So apologies for the streamception here really quick. So we're just going to hop into it and hopefully you guys get a good view. So appreciate the mic might not be as good quality. Just wanted to throw this headset on really quick and walk through this. So relatively good past 2 months, May and June of 2023. So just dividend income alone, you're looking at about $4,100. Then you start to include options income. This one's actually an interesting story. I know I don't really go too much into the options piece, but we had a lot of breaches. So like Google, Amazon, Spy, Pepsi, they all breached pretty significantly. And so Pepsi, I feel like I'm out of the clear. That's retraced since the May June timeframe. Uh, Went all the way up to 195 bucks, which was where my breach was. So I was actually able to like, or maybe it was 190 or something like that. But I rewrote for 195, expiring either July or August or something like that. I don't remember, but was able to roll out, get a little bit of a credit for that, and it looks like we're now below that, and I think that we'll be okay unless earnings come out later this week and completely blow it out of the water. But I think it will be okay for the time being. Spy and Amazon and Google as well. They had really good run-ups through May and June. And so with that, obviously I had to rewrite. And so my goal was to not necessarily go too far out and lose any credit or anything like that. So I just kept making sure that wherever I was looking, it was as short as time possible, 2 weeks or maybe 3 weeks, and just roll it out. And I think Amazon, I think that was something that I needed to roll. I think I did last week. I rolled it again, and I think I'm in the clear for that one. Google, I was in like the 130 time frame for the strike price, so I think I'm in the clear in Google because it's retraced to like the 120s, and I think that's ending in July. But I'll double check. But anyway, it was at one point pretty scary. Had to roll those out and buy back for several $1,000s because I have three contracts for each. So it ends up being a pretty big sum. But regardless, we'll get into the nitty gritty about the year over year increases, decreases, what have you, a little bit later, if I don't forget this time. But let's just hop right into for May what companies paid me, and then we'll talk a little bit about what companies I've gotten rid of since 2022, because that's an interesting stat that I keep track of as well. But May, I think we ended up just over 1,000 in terms of dividend income, so about 1,060 bucks. So smaller than the rest of my months. Generally speaking, the second month of every quarter is pretty low, and then the last month of every quarter is generally the largest. So we have Devo for 158 bucks, Jeppy, so another monthly covered call ETF for 330 bucks. O, which is up to 123 bucks, almost 124 bucks a month. You'll see that once we get to the June time frame. Stag, it's an $82, and then you have $133.27 because there wasn't for XYLG, there wasn't a payment in April, and so we got one in early May and late May. Looks like maybe some straggling interest here. That's not really important. Some JEPI for 93.25 in the Roth IRA, and then I think the rest might be just $1.04. I don't check this account, so there's $5 that's straggling. I don't know how real that is. It might not be, so take that with a grain of salt. But it's only $5. It's a small account with equity share or something like that. They've changed the name a couple times. That investment brokerage keeps getting handed over from person to person. We have a personal savings account for $70, and we have the Cardone Capital for $62.50. So that all together gets me about $1,000.60, give or take a couple bucks, depending on accuracies of some of those smaller transactions I don't really look after. Also made 154 bucks in May on YouTube, and then the options income was about 1,300 bucks. A lot of that was writing Pepsi, Johnson & Johnson. Never really get to write on realty income, but some of that's Palantir, TQQQ, my SPY contracts. So a lot of you guys are like 50 bucks, so you scoff, but it's like it adds up, we're already closing in on $5,000 extra for the year. I recognize this gets taxed pretty heavily, but At the end of the year, it's another, three or so $1,000. So you could add, after taxes and stuff, and if you double this, we get to 10. Talk about $7,000 maybe that you can add. So it's another zero point 0.7 or 1% maybe that you can add in terms of the dividend yield on the portfolio. I don't really get to write on everything because some of those things are in my 401k and some of those things are in my other accounts where I can't write options income. So um, maybe closer to 1% or so additional yield, and that really helps from a standpoint of being able to get the appropriate yield you need to retire early, if that makes sense. So then hopping over to June, like I said, the last month of every quarter is generally pretty good. So $3,100 here, $1,600 in options income. So that gets you to about $4,800, close to $5,000 in terms of income. Now I just reinvest all this money, so it's not like I'm going out and buying a Lambo and paying for my Lambo payment or anything like that. But let's hop into the companies that pay me. So 5261 from BlackRock. I think I added a little bit of a position here. I'll have to double check if I think I added like half a share or something. So I'll have to double check if I added that in here because I'm only seeing like a 30 something cent raise. And I thought I added like another half share or something. Devo again, monthly covered call ETF. JEPI again. The payments for JEPI were down pretty substantially in June. So good old J&J for $250. Um, so we're up. We're forecasted to be up over $75 year over year. So we had 920 odd bucks last year in J&J. We're closing in on $1,000, and with dividends reinvested, I'm sure we'll get over $1,000 for the year in J&J, which is pretty cool to see. Realty income, $124. That's another one we're up almost $100. This one's really cool to look at because it's like every time you get another 60, 70 cents added, and so it's really starting to compound here. It's like every single month you're adding another, so it's like next month we'll be at $125, 100. Now it doesn't keep going because I don't have it like built in automatically, but I'll update the share count and I'm sure it'll get close to 126 bucks, 126 bucks in August, so it'll be cool. Pepsi are seeing the same. Made $919 in Pepsi last year. We're forecasting at over $1,025. So last quarter alone, we made 243. So now we're up to 269 to pay. Next quarter, we're up to 271. So that's really cool to see that compounding kind of at work there. June again, you had Shell, $472. We just got a 15% raise on this bad boy. So should be getting $450. Sorry, $540 next quarter for that. Last year, I think because I'd sold some of my position like Exxon or something, and I added latter half of the year. That's why you're going from $1,500 to $2,000, coupled with that increased dividend payment. So that's pretty cool to be able to see. So we're closing in on 500 some bucks a quarter on that one. That's my big energy play for the long term. It's got a good natural gas portfolio, got a really good oil portfolio. Couple that with their long-term renewables. I think it'll be great to have for the long term. Stag Industrial about $83 here. $935 in 2022. Looking at 987, maybe get close to that $1,000 mark here in 2023. So we'll see what ends up happening with that bad boy. TQQQ surprise dividend. I do have about 1,300 shares of this. So it's like $50,000 or something like that. So getting that surprise dividend is pretty cool. Made 128 last year, so already doubled the amount, and hopefully by triple it when it comes to the end of this year. We have XYLG. That's down as well from last year because I did sell some of it. So we had a double payment in May. We just have a single payment here in June. So I might need to adjust this forecast for this because it looks like it's down more so in the $60 to $70 range, not the $80 range. BHP did not pay us. We have JEPI, $81 for this. I might have to update this forecast as well because it's kind of hanging around the $90 range. SLG was my first SL Green payment for $89. This is going to be one that continues to compound as well. The next payment's 90 cents higher than that, so it'll be cool. This is a monthly guy. every single month, increasing that a buck. So within 5 6 months, we'll be closing in on $100 a month, which would be nice. This is a new one that's in the portfolio, and I'll tell you which one I sold off to be able to get this. $25 for TQQQ. This is $55 for the year so far. I'll probably get close to 100 just based off of that. And I sold WP Carry, so you'll see maybe $429 last year in WP Carry, 217 this year, and that's sold off. And a lot of that money went into SLG. So down 200 or down to 400 a year, but increasing probably closer to 1,000, $1,200 a year. So almost tripling the amount of dividends. Now, this is kind of a turnaround speculative play. My thought process was, I was like, all right, well, I'm collecting 400 some dollars in dividends a year. Is this an opportunity to double, triple? And then if I double, triple the SLG position, I'm already up 30% on this, maybe closer to 35. But if that ends up doubling, sell a large portion of it, put it in SPY, leave the rest to kind of get that dividend, and hopefully the New York assets and commercial real estate kind of comes back to life, which it looks like it already has. WTRG, which is essentially utilities, it's a small company. I just put $50 in for a couple of years. Now you're just seeing kind of it continue to pay out. It's a water utility, natural gas utility up in Pennsylvania. So that's nothing too big. $50-$60 a year in dividends on that. Then you get some shares from UDOC that pay out in the third month of every quarter. Cardone Capital, and then once again the website savings. I wasn't really sure which of these was real, and I was too lazy to log back in. So it's around $70 to $71. It might be off $1 or $2. It's not like it's going to be off too much. I haven't added too much to the personal savings. I got like 24,000 in there, just for in case I decide to put another down payment on something, personal house, secondary house, what have you. So that's where you kind of get to, man. Close to $7,500 between the 2 months, just over $4,000 in terms of dividend income, and then options income being about $3,000 itself. Looking at the monthly dividend analysis, May and June were up 13 and 18% respectively comparatively to 2022. You can see, in 2022 in May we made 938ish bucks, made just over 1,000 here, so that's the 13%. And then last year in June 2022 we made about 2,600 bucks. Now we're up to around 3,100ish, so an increase of $500 or so. So that gets you to the 18% range. I'm expecting to kind of close the year in 2023 at break even in terms of year-over-year dividends. So you can see some of these months, a lot of this has to do with the fact that I'm selling out of some positions and rolling them into the SPY or what have you. And so I think while we'll continue to add capital to the portfolio, it'll probably be in lower dividend sort of positions. And then I'm continuing to consolidate. Like I'm looking at J&J and Pepsi at the moment. Do I consolidate one or both of those and put them into the SPY and just continue to consolidate the portfolio more and more and more? While it's nice to see $1,000 in dividends a year, it's like, I think in the long term, J&J and Pepsi's a great company, but it's trading pretty richly, 25 to 30 times PE. And same with J&J. J&J is kind of going through this transition with Kenvue. Hasn't really showed in too much of a value proposition back to the shareholders as of yet. They have yet to kind of like give us any share of it, if that makes sense. So it was kind of spun off. It's trading. KVU is trading, but the J&J shareholders have yet to see any sort of dividend from that. And so I'm like, okay, well, when will we, if that makes sense? I know that it's kind of like a wholly owned subsidiary at the moment of J&J, or a very large owned subsidiary of J&J, but when am I going to get my piece of it? So it kind of makes a little bit of frustration in that piece, and I just don't see J&J really tripling, right? The J&J piece of the business is going to be kind of like the staples, like the Band-Aids, some of the lower margin sort of cosmetic items, health items. It's not going to be the biopharmaceutical piece, right? That's the Kenvue. So it's like the high growth area has been spun off, and you kind of have like the staples, healthcare staples and stuff like that, kind of sticking in the J&J nest egg. But anyway, that's kind of just a look there. But yeah, just take a quick look at the year-over-year growth and dividends by month. Can kind of see this orange bounce around between 2 to 3 thousand a month with some lows here in the $1,000 a month, kind of in the second month of every quarter. But averaging out probably close to about $2,000 a month when you account for it. So you're 2,000 in the first month of the quarter, about 1,000 in the second month of the quarter, about close to 3,000 towards the last month of the quarter. So evens out to about 2,000 a quarter. So I think we're going to end up, like I said, a little bit flat. I think we're forecasting about 23-ish thousand. I'd say with the capital that we continue to increase, coupled with the consolidations, I think we're going to stay around this area, maybe go down slightly. And I think a big piece of it from 2020 to 2021 to 2022 was consolidation, adding a lot of capital. And I think 2023 we're continuing to consolidate, add a lot of capital. I mean, if I wanted to, I have $20,000-$30,000 I could add to the market right now and bump this up, $1,000 or $2,000. But to me, it's okay keeping that volume in a savings account, and even that savings account's making a little bit as well. So it is what it is. So just thought I would share that, and I'm trying to think if there's any other items within here that I wanted to really show. But other than that, I think this is hopefully helpful to you guys. You get to see, obviously, it's like, Matt, your dividend growth has been somewhat flat from 2021 to now, and that's by design. I'm 31, so maybe I'm 32 now, 32 years old. It's like I don't really need the dividend income right now. I'm still working, still kind of chugging along in my career, about to hit kind of like the mid of my career, start to kind of get, the place where I'm 10 years in with the company, and within a few years I'll kind of be in the middle part of my career, the mid 5 to 10 year portion of my career. So I'm kind of entering that first third, and kind of going into that second third of my career now as we kind of talk about it. And so I'm like, well, I have a few years before I really need to make a decision about retiring. And it's like, okay, well, if I were to go heavy into dividend stocks, like, okay, I'd be making 60, 70 grand a year. Like, that's nice, but it's not gonna change anything, right? Unless I was being able to make $150,000 to $200,000 a year. That's where you kind of get to a point where you're like, okay, maybe the lifestyle that I want to live, and could walk away from a 9 to 5 job. So in the meantime, I don't mind having a little bit, $2,000 a month sort of drip coming in from dividends, write some options income, continue to invest, and kind of grow that nest egg, trim some of the heavier dividend focused sort of positions, move them more into the SPY, and in a couple years or so, maybe that trend will reverse. And I say, I'm getting closer to calling it. Want to be more entrepreneurial, want to start my own businesses, what have you. It all kind of really depends on what's going on in the career. I like what I do. I like providing energy to people, so I don't really feel a need to hang up the boots. I love helping people. I talk about that quite a bit. That's why I make this YouTube channel. And I think what better way to help people than providing energy? A lot of things that, energy is something that people take for granted every single day, but at the end of the day, helps heat their homes, helps to provide them electricity to charge their phones, helps them get from point A to point B. And a lot of times people don't even think twice about it, just by providing the energy at a low cost, which I help provide to that infrastructure. And so I love it. So I can't say like, okay, it's time to hang up the boots in that respect, and kind of go and kind of do something on my own full time as of yet. So anyway, that's just kind of my thought process, and as always, love to kind of chime in it with you guys, going on 20 minutes, looking over 2 months worth of data. But hopefully it was helpful. Hopefully you get a little bit of insight. Would love to hear any questions. I'm gonna head to bed now. I have an early day tomorrow and a busy week, so might just throw this one up and maybe make a quick thumbnail and call it a day, and see what you guys think. So let me know what you guys think, and I'll talk to you guys tomorrow. Cheers.